So the Bentley CEO says that sales are down because the rich are experiencing emotional sensitivity due to cost of living. How long do you believe this spending freeze will last?
I think probably 18 to 20 months. It's really interesting because some people, like, I think there's two classes. Like in this market, you're either doing incredibly well and you're seeing your personal income and personal revenue be the highest it's ever been, or people are like suffering tremendously. But Gucci announced that there will be slowing sales. I think LVMH will do the same soon. Bentley CEO stated this. So I think even though that the market has went up a ton, we are going to see like slower spending for 12 to maybe 18 months. And then after that, we'll take back up to the upside. I think once we figure out who's going to be president, what the policies are going to be, if things get smoothed out with China, then people will feel more comfortable. But I think right now people are tightening their belts a little bit, even though the Kellogg CEO made that horrendous recommendation. It is reflective of the prices of things being higher than they usually are. So I think for probably an 18-month period, we'll see sales going down a little bit more and people tightening to their essentials and be a lot more quiet about their wealth. Like people aren't being as braggadocious. Like 2020 COVID, everybody had Gucci, Louis, everything head to toe looking like a mannequin. I think that's slowed down. Even in like the sales of Nike, Nike's hit a low that I didn't think they would hit again from 2022. So 18 months is what I have projected, but what do you guys think?
Yeah, I mean, it depends on where the spending is. You brought us some retail. Nike, we spoke about Lululemon 2 weeks ago, about some of that being down more than we thought. But are luxury goods going to be down, right? Is LVMH stock taking a hit, right? Like
I don't think they'll take a hit, but Gucci probably will, and the lower luxury brands I think will.
Yeah, I mean, even during the pandemic, for the past 6 months, I mean, you look at LVMH stock, it's up 21%, right, over the past 6 months. And so we know consumerism is not going anywhere. I just think where the money's, so like in your supermarket, yeah, you can feel that. But as far as the rich feeling emotionally sensitive, I don't know. I don't know, because people are still spending money at all the time. We saw some of the numbers, even in China, when they're being surprised about the amount of spending that is happening. And so they're having record sales. We started looking at some of the credit card companies. If we're looking at Visa, if we're looking at American Express, how have they performed over the past 6 months? They've done pretty well. Right. So when we start looking at these things, I'm like, yeah, well, it depends on where is it. If we're talking about automotives, are we buying luxury cars? Well, I just saw Lamborghini release something and it's sold out before it even is being produced. And so it's hit or miss. It's just about the area of where it's being spent.
Charlie, what you think?
Well, let me ask another question, because it's like what goes up must come down. So
yeah,
being that the stock market is at an all-time high, are we setting up for a major pullback or correction either in the summertime or fall?
Yeah, I think in the summertime we'll have a pullback. Even though things are at a record high right now, June and August are usually rough months. And I don't know how much longer we can just have NVIDIA pull the entire market up, or the promise of AI. Like we pretty much have a cartel between Meta, NVIDIA, AMD, Microsoft, Google, and Apple. I don't know how much longer they can drag the entire market up. And if it wasn't for NVIDIA and AMD pulling the market, and SMCI, it probably would be flat.
You left Amazon out of there.
Oh, Amazon. True. Yeah. 2.5 invested in Anthropic. Job well done. Need it. But I do think we will see a pullback. Lilly would be great, of course. I think most of the healthcare companies would be great. But the numbers aren't as strong as they should be. We've talked about the geopolitical risk and concerns before, but the numbers just aren't as strong, and CEOs are getting quieter. The only ones that are like out publicly facing are the ones that are just dominating the market, like Jensen. Jensen looks like a rock star when he had his conference. Mm-hmm. Most CEOs have been a lot more quiet, I think, and then revamping their business models to prepare for what's to come. So I think we'll have a pullback July and August, and then we'll be back to the races towards the end of the year.
But that's not atypical, right? Like we've seen that over, especially. I mean, I like to use these past 4 years of Market Mondays as a microcosm of how the market works. Like we've seen this. We talked about the summer slowdown, and there was an outlier in 2020. Obviously, there's the pandemic, but we've seen that historically. If you look at the summer months, the volume is down. There's going to be a pullback. We've seen it in the beginning of September. Like we've seen these things, and so they shouldn't be unfamiliar, right? Prepare for it, right? Like. If you were on the sideline, if you weren't participating, well, why weren't you? Was it because you were waiting for this pullback? And now it's all right. I know September is coming. Historically, we've seen that as a month that the S&P has pulled back, NASDAQ has pulled back. All the major indices have had a slight pullback over the past 4 years. This would be the time to enter. So, yeah, I mean, a pullback will come. Just how much of a percentage, that'll be the key indicator. But yeah, this AI train is. I think we're still in the beginning of it. We're still in the beginning of it.
I agree. The only thing that I won't say worried about, but I think one variable that's different is the lack of quantitative easing. So even with Bank of Japan or Japan finally coming off of break even interest, and they spiked it just a tad bit. I wonder how that's going to affect their market and the Nikkei. And if we don't have easing anytime soon, I wonder, will the pullback be a little bit sharper, and will the companies that are just like floundering around not do as well? So we'll talk about Tesla soon, but even like companies like Zillow that had a bunch of promise, they really haven't moved. Spotify hasn't moved that much either. Disney. I mean, I'm hoping it can break above 127 for you. I really do.
I'm just every week we're starting to see this number move up. And
yeah. So, but be on the lookout. If the market pulls back 10 to 15%, of course, every week we'll be here. If I see some numbers I like, I'll be sure to call them out. But the companies that benefited greatly from a lower interest rate environment or more money being available to consumers, it's a tighter squeeze. I mean, credit card debt is still at a record high, and people are not paying off those balances as quickly as they used to either. So we definitely have to factor that in.
It's true.
So, okay, let's talk about this then. What are some common mistakes that traders make in these type of markets?
So in a market when we're in like now, when the market has just been going up and on fire, I think not preparing for when you need to start to short, because a lot of times traders will say, well, I'm a bull investor or bull trader, or I'm a bear. And it's like, well, you have to go whatever the conditions of the markets are. So don't get caught if the market has a downturn in June or July and think that your strategy for going long when you're trading doesn't work. So number one, you have to be able to flow with the market. Number two, if the volume drops in the summer, you're going to have to adjust your targets. So if you've been killing on options and getting 100%, you may have to cut that down to 50. If you've been going for like, let's say 40 ticks on ES, you may have to adjust and go to 20 in the summertime, and then in the fall, adjust back to a longer target. And then third, understand when the volume is lighter, there's different players in the market. So like at the open and close, there are different players that are trading, but in the first quarter and fourth quarter, sometimes the mix of traders are not there in the second and third. And lastly, I would say if you are not doing that well at the open, to trade the close. That way you can see what happened the first 5 or 6 hours of the day. You have a clear direction for where the asset is going. And then at the close, you're going to see the most volume in the last 10 minutes. Look to take your trade in those last 10 and you'll be okay. But if you're not doing well at the open, getting 3x return, profit factor of 3 or above, I would trade the close from now until probably September to get an edge in the market.
So trading the close is an interesting strategy. So a lot of people, and they get confused. They'll say, well, obviously the market closes at 4. At what point do I wait to it's 3:30 and it's like there's a half hour left, or is it 3? So you're saying that
I'll start looking at 3.
You start that. So you start looking at 3, but do you make the move until that last 10 minutes? Because especially if you're trading options and you have to wait for that to even be filled. Sometimes if you try to put that in at 3:45, pause. If you try to have an option filled at 3:57, it might not get filled, and then you miss out. You got to wait till 9:30 the next day. So what's that time frame that you like in futures and I guess I mean, it could be transferable for options as well.
Yeah, the last 15 minutes is what I like. If it doesn't get filled, it doesn't get filled. If the move isn't there, you can't force it. But because in futures, like you can get whipped out so fast or go negative. You have to wait for the right move. But normally the volume kicks in the last 10 minutes. Now, if you get the trade right, you'll hit your target really fast. If you get in at a bad price, that could be disastrous. So you need to practice. But those last 15 minutes is when I'll be looking to fire for sure.
Yeah, and I'm glad you said that. And I want everybody, I'm going to look into the camera, right? It's okay if it doesn't get filled. Like if that, it's okay.
It happens.
People get really frustrated and they're like, all right, well, I know I put my limit at this number, but whether it's $9, right? And the limit now that the ask is 905 or it's 950. You don't have to go up to that number.
Nope.
It's okay.
Don't do it.
It's okay. Be disciplined in what your plan was, right? So if it doesn't get filled, that's fine. You come back tomorrow rather than taking a losing trade, you buy it and obviously it depreciates once you get it. So it's okay if the option contract does not get filled. Come back another day.